1400, let's crack on. Today we're going to talk about the biggest balls on Reddit, who actually won, Wall Street or retail, who are Wall Street. We'll talk about the silver squeeze and why it's not what you think, and can we trade this? I'm going to set myself a new resolution as of this week. I was chatting with my wife the other night and she said, "Simon, your videos are too long and too boring." It's great having a wife. They tell you the truth. And to be honest, I sort of agree. Some of my videos are rather long and I do waffle around. Hell, 52 minutes in and I'm already waffling. So what I'm going to try and do for the rest of the year, it's going to be hard for me because I do like to waffle, is I'm going to get straight to the point, and that will save you loads of time. And then if you want to hear the long-winded answer, you then have the option. So that's where we're going. Also, do you like my new webcam? Got me an HD now. So yeah, welcome to 2021. Right, so the biggest balls on Reddit. James. Okay, so I have been going through Wall Street bets, and I've read quite a lot. And for those of you not familiar with it, on the last video, in fact, I think it was the last trading pub, I went through this whole what is short selling, all that sort of stuff. So I won't go into all of that. Yeah, so this video here, the last one I put on YouTube, it's definitely worth watching if you want to know the mechanics behind short selling. But I came across a user called, excuse my language, 𝗵𝗶𝗶𝗶. Now, I'm not swearing, it's just his name. That is his username. Let's call him DFV from now on. And he's not the main guy in Wall Street. However, he's probably the person that's made the most in terms of retail traders. Now, if you look at his posts, he's been going long on GME for a long time. Now, I actually think he's been extremely lucky in this post, in this play. So yes, he's a switched on person. However, what's happened, he definitely could not foresee at all. So he's been buying call options, so calls on GME all the way back since sometime 2019. I'll try and find the post. So I've got another thing here. So yeah, this is his first sort of post where we can see where is the cost? No, it's not this one. Get rid of that. No. Oh, God damn it! I had it all prepared here. Anyway, so okay, I can't find it now. However, he started off with about $50,000 buying GME calls, and the reasons he was doing it. Oh yeah, the cost here, $53,000. That's when he first started. And in the Wall Street bets, he was shouting, or not shouting, he was explaining why he was getting into it. He's saying that it's underappreciated, yada yada yada. And so this play was not like because he saw that this Wall Street bet thing would go viral. It was just because he thought the stock was undervalued, where everyone else wasn't. But the reason why I say he's got the biggest balls on Reddit is because he's turned this $50,000 into, here we go, if we click this, $46 million, which is just insane. And and a lot of people would have sort of, you know, if you ever turn your $50,000 into six figures, most people would cash out, or cash out a lot. And so credit where credit's due. He's got some big freaking balls to hold on. Mind you, he's already cashed in $13 million, so he's got 13 million, almost $14 million in cash there. So he's happy as Larry. So that's probably, yeah, the R multiple on that is just obscene. So I think what's what he's probably doing is he's cashed out enough. Mind you, we don't know what he's going to do with that 13 mil. He could put more in, but I think that'll be a bit risky. So I think the rest is YOLO, you only live once. So yeah, so that's just insane. And if you are bored, go on to Wall Street Bets and have a little read, because it is just fascinating, because you can get into the whole psyche of it all, and you can very easily see what's those who know what they're talking about and those who don't. But it's basically just a big pump and dump place at the moment, and pump and dumps haven't changed. They've been the same for thousands of years. like there's supposedly a pump and dump in Ripple today, supposed to be I forgot what time it was. And if we look at Ripple, where is it? Somewhere down here. We had the pump, but with a pump and dump, you don't like. They normally say, "Hey, everyone at 2 o'clock, buy in blah," but you don't buy in at 2 o'clock. What you do, what happens is the people doing the pump, they buy a lot beforehand. So when people start coming in at 2 o'clock or whatever, like we saw here in the literally last couple of hours or so, Ripple ran up to sort of 72 cents. But that's where the pumpers exit. So when the masses come in, so that's all that's happened. And to a degree, GME has been a similar story. So as I said last week when this whole GME thing came on, I said this is not as it seems, because the story behind this is that, you know, Wallstreet Bets, as in the Reddit forum, wanted to flip the bird and give the finger at Wall Street and hurt them at their own game, because a couple of hedge funds were massively short on GME, and so they wanted to basically punish them. But who actually won? So the first thing that popped up into my mind was that GME is a relatively large cap stock, and so it's on an index. It's, off the top of my head, it's definitely not the S&P 500, but it's in one of the small caps. So it's still, you know, it does billions of revenue every year. So it's a relatively big company. Now, as a result, a whole bunch of pension funds in general, and some hedge funds will, by their very mandate, have some allocation in GME. And so when I saw that GME went from like $20 up to $400, I was like, wow. Instantly, the funds that hold GME are absolutely milking it. And it didn't take long to come across this article. So I'll quickly read through this. 9 investors instantly make $16 billion on GameStop. So on one scale, we have DFV, who's obviously done incredibly well. Very jealous. $50,000 into, you know, 40 odd million. Well, we don't know yet. We don't know when he's going to cash out. But on the other side, we have Wall Street that have made at least $16 billion from this. So if we go through this, just want to skip through the small talk, blah, blah, blah. Yeah, so obviously there's a whole bunch of individuals, you know, like the director, you know, the C-suite of GME, they'll have all sorts of stock options. So they would have done, I mean, the people working in GME right now, they will be overnight millionaires easily. But look at this. This is the table that shares it all. So we have Fidelity, BlackRock, Vanguard. Like, these are the types of names that Wall Street Bets was supposedly trying to hurt. Yet look how many shares they've got. 5.3 million shares. BlackRock's got 8.6 million shares, and Fidelity 9.5 million. So you can see that's look at this. So Fidelity made $3 billion, BlackRock $2.7 billion, Vanguard 1.7, and the list goes on. And this is just a very small list. Sorry, the main list will be a lot bigger, but this is obviously only talking about those that made, you know, billions. What about the massive list of people that made tens, if not hundreds of millions, as in the smaller funds, the other hedge funds that are on the other side? So you then have to ask, who are Wall Street? Well, people think it's one amorphous blob, but it's not. Wall Street is just a massive broad brush term for lots of different entities. And when you say Wall Street, you could easily say that they're the central banks, the big primary lenders like Goldman Sachs, HSBC, etc., JP Morgan. They could be other somewhat smaller banks. You then have the big hedge funds, as in the massive, you know, Bobby Axelrod type hedge funds. Those of you who watch Billions, you get that. Then you have a whole plethora of medium to smaller type hedge funds, going all the way down to hedge funds that only have 10 to 100 million in AUM, assets under management. So there are, I would say, hundreds, if not thousands, of different entities there. But not just that, you also, in Wall Street, you have pension funds. So you have multi-billion dollar pension funds. You have mutual funds like BlackRock and tracker funds. So Wall Street is like this. it's literally thousands of different entities. So when the media were talking about, oh yeah, a whole bunch of hedge funds are going bankrupt, yeah, like probably a small handful of hedge funds are probably going bankrupt right now, or they're getting bailed out, or most likely being bought out by bigger fish. So they're not always on the same side, don't forget. So all the hedge funds are competing against each other. So they want market share. So if one hedge fund blows up, guess what? All the other hedge funds are like sharks in bloody water. They're sniffing, ooh, okay, we're going to take out 𝗵𝗶𝗀𝗀𝗃, or, so yeah, they'll just buy them out. So that's one thing. And why do you think it got so big? It wasn't a simple �Wallstreet Reddit forum where millions of retail people bought $1,000 of GME each. That's absolute BS. Anyone that's been in the markets for more than 2 minutes would sort of see that a long way away. So you have to understand the sort of conversation that will happen. So like, okay, let's say I am some hedge fund that has been on the sidelines, that had zero exposure to GME, and all of a sudden we see a whole bunch of other hedge funds starting to blow up, and then go, huh. So I would go, right, lads, because it's normally blokes in the trading floors, meeting, I don't know, 2 o'clock. We're going to talk about GME. How can we play this? And so you have a whole bunch of hedge funds across the world having these emergency meetings with their top team, going, how can we play this? And they were like, okay, well, let's just go long, duh. Let's just actually, in this meeting, let's get our PR firms in, because every hedge fund, don't forget, has massive retainers with marketing companies. Look at Bloomberg. Look at all of the talking head news channels, Bloomberg especially. Pretty much all the time you have the heads of all these hedge funds talking up their own stock. So they'll be talking about blah or blah. I mean, you have that billionaire who actually I quite like. I can never say his name. 𝗪𝗶𝗶𝗃𝗲𝗃. Sorry, 𝗪𝗶. But they all do the same thing. They have their book and they go online or on TV and they talk about their book. And then they have hedge funds that argue about their book. And it's just interesting TV. So what happens, they'll get their marketing companies and go, how can we actually leverage this? First of all, how can we actually get, instead of a little knife in their back, how can we get a freaking samurai sword and slice up the backs of these other hedge funds whilst profiting crazily? So what do? Well, okay, let's come up with a viral campaign. Let's get a whole bunch of bots on Wallstreet Bets. Let's pump this. So they all go long on Wallstreet Bets. They pump it. It goes viral. They probably would have spent a whole couple of $1 million in ad spend just to pump it up. And then guess what? You have shitloads of Wallstreet making billions of dollars. A few retail people who become overnight millionaires. But at the end of the day, Wallstreet won. So when you go on YouTube right now, all you'll see are videos of people going, "Oh, retail is, giving it to the man," but it's the other way around. So that's who Wallstreet are. Now, the knock-on effects of this is that everyone's saying, okay, what's next? So you have the Bang Gang, so it was BlackBerry, AMC, who's N? I forgot. Oh, Nokia, and then GME. That's, I think, something I've read on Reddit. And yes, all those other stocks have been pumped somewhat. But again, this is just a normal pump and dump. It's not hurting anyone. At the end of the day, it just helps the funds that have them in their portfolio. And a whole bunch of funds will have Nokia and GME and AMC in their stocks. Sorry, in their book, or portfolio. And no, it's not Netflix, mate. It's Nokia. That's what they're pumping at the moment. So what's happening with all these things is they're trying to, Wallstreet Bets, they're trying to pump shitty stocks that don't really have that much fundamentals because they know that the big boys will be shorting them. That's what they're trying to do. They're trying to create a short squeeze. Everyone's along on Netflix. They're not trying to pump that up. However, it then very quickly spilled over into SLV. As I said in my video, people are now looking at SLV. We could see a bit of a spike in SLV. And when we look at, oh my lord, having a trading pub, and I don't even have my trading station open. Stand by. let's move that aside. Let's get my charts open. Come on. Talk about concise videos. Here we go. XLV, sorry, not XLV, AG. So if we look at silver, yeah, it's had a bit of a rally. It's nowhere near a short squeeze. We've just had, mind you, it's a nice rally. We hit 30 and it's pulled back. But in order for silver to actually do any damage, a few different things need to happen. So let's go back to here. So SLV is not what you think. So yes, a couple of videos have gone viral saying, hey, the way to crash the system is to, buy up silver. And that's only a half truth. So yes, it will, but not the way that Wall Street Bet and the retail market are doing. All that's happening is that they're logging onto their share trading platforms, whether it be 𝗪𝗲𝗄𝗃, Lansdowne, unlikely, or whatever's in America, their Schwab account or whatever, and they're buying up the ETF, SLV, the ETF. Well, who do you think owns SLV or GLD or any of these other silver ETFs? It's it's Wall Street. It's hedge funds. It's these massive mutual funds that own iShares. So by buying SLV in whatever brokerage or account that you have, all you're doing is just giving your money to them. It's not hurting the financial system at all, which is what the whole Wall Street Bets thing is trying to do. They're trying to hurt Wall Street, but in fact, all they're doing is just throwing shitloads of money into their pockets. However, I said it was a half-truth. There is a way to really screw them over, and that's to buy physical. Okay, there's two ways. So one, you actually buy SLV, and then you demand delivery. Okay, it's the physical silver that actually hurts the system, because it's the equivalent of you having a house. So in fact, let's draw this instead of just looking at my ugly mug. So let's say you have a house, okay, and you're a dodgy real estate person, okay, and this house is, I don't know, let's just call it $1 million, and you have a buyer over here and goes, yeah, I'll buy it, cool, and $1 million goes, they make their commission, so I don't know, let's just say it's 10% commission. Let's say it's huge. So Dodge, just call him a Dodge person. Let's just say it's fee. Okay. Obviously, I'm just plucking these numbers out their ass. So obviously, Joe blogs, but let's say it's like a time, or it's like a foreign house. Okay. So, but there's one house, and someone buys a house. Cool. So they think they own this house. But this is overseas, this person's not going to visit it, it could be like an investment house or whatever. So what the dodgy person does is go, hey, I've got this lovely house, it's by the beach, it's $1 million, let's sell the house. And so someone else comes along and goes, yeah, okay, I bought this house. Sweet, they've just made another 100 grand fee. And they go, well, this sounds really, this is just easy money. I make, like, what are the chances of these people going to live there permanently? They may, and before you know it, this dodgy realtor or estate agent starts selling it to hundreds of different people. So before you know it, you have 100 odd people thinking they all own the same house. Now, obviously, there's no like delivery thing, but eventually, when someone says, I need to have the deeds to my house, whatever, this person can't give the deeds to everyone, or if he's really dodgy, he'll Photoshop them and make duplicates. I don't know, but that's what's happened with silver. Instead of a house, all these so iShares, GLD, SLV, they've sold incredible amounts of paper silver, more than what they actually have in their vaults, and the number it fluctuates a lot. And I haven't actually looked at the latest number. The last time I looked, it was like 80 to 1. So for every 1 ounce of silver they have in their vaults, they've sold it to 80 odd different people. So the only way to really hurt the global financial system, and Wall Street especially, is if there's a run on silver, physical silver, not SLV. SLV just plays into the Ponzi scheme and it just gives them profit. It's the physical silver. So the way to hurt them, one, is buy SLV, as in, go onto your thingy, but then demand delivery. that'll hurt them because then you'll start seeing outflows of physical silver. But the easiest way to do it is just go and buy physical coins. Now, the problem with physical coins in the UK is that you're going to pay VAT, so you're 20% down already. And if you're going to buy physical gold and silver, like, it's a long-term play. One, there's no yield, so it's chunks of metal that sits in your cupboard or in a outsourced storage box somewhere. And then really, so I guess buying physical silver, one, it's a hedge against uncertainty. So if the world goes to pop, then yeah, you got some silver or gold. And two, it's the other sort of the monetary reset play. So you're sort of hoping that the IMF does some real dodginess with the world markets and then go, right, yeah, we're going to back the IMF SDR with gold or whatever. Or China backs part of their currency with gold and silver. I'm going to mute everyone because someone... there's some weird noises I'm hearing. Right. So... yeah, so you buy physical silver, but it's a long-term play. I've held my silver for 10 years now. So, yeah, I just don't think this is going to work. I think people pushing SLV is most probably the actual hedge funds themselves. They're not stupid. One, they're incentivized to make lots of profits. And two, they have the resources to manipulate things. So they could easily make a couple of thousand bots on Reddit to push certain things like Ripple. Like people are trying to buy Ripple and Doge. That doesn't hurt anyone. All it hurts is, in fact, it doesn't hurt anyone. It just helps the bag holders. So the silver squeeze is not what you think unless you buy physical silver. However, if you look in the the small print, like terms and conditions of all of these bullion houses or these firms, there will always be a force majeure clause in there. And so in simple English, it will say something like, in the event of a force majeure event, so an unforeseen, random occurrence, we are allowed to settle contracts in cash. So that's pretty much every bank, every bullion bank out there, or all these shares like iShares, SLV, GLD. If there's anything crazy that goes on, what they'll be able to do is be able to suspend trading. They can suspend certain types of orders. So if you go back to 1980 when the Hunt brothers cornered the market, silver shot up from nothing all the way to $50. And then what happened is that the COMEX, the commodity exchange, banned all buy orders and they only accepted liquidation orders, i.e. sell orders. So guess what? The price plummeted. That's exactly what 𝗵𝗶𝗏 did with GME. So all of these companies, they'll be able to do exercise their force majeure event and go, yeah, we're not going to give you physical silver, we'll just settle you in cash. And they get to pick whatever price that they settle you with. So SLV is not going to do jack shit. All it may do is help people that have been holding silver for a while to maybe exit. I mean, there must be millions of people around the world who have been buying silver and gold for the last, let's say silver for the last last 10 years, and they've been buying them at $20 an ounce, $30 an ounce. And for the last 10 years, their wives have been nattering behind them and going, why did you buy that bloody silver? And now that silver's back at $30 or whatever, it's like, ooh, okay, maybe I can get out, break even now. So we'll probably see a bit of resistance at $30, definitely at $50. That's like the 1980 high. But I mean, if we break $30 right now, the next resistance is 50. So this is going to be pretty crucial. And by the way, it sounded pretty derogatory when I said you have your wives nattering. It's just that I'm in a group and there's literally, I know of about 20 odd blokes where their wives have actually lambasted them about buying silver over the years. So I've just seen a quick question by Roberto. When this hype game is over, will silver return to normal? I don't know. I'm hoping that this sparks something, because by the way, if you look at the inventories, so what is it, the COT reports, the commitments of traders reports, and it shows all the inflows and outflows into SLV, and I guess the open interest of it all. And when you look at the total amount of silver mined per year, it's very small. Remember, silver is a byproduct. It's a byproduct of copper mining typically, and all it would need to do is maybe, I don't know, 50 odd million people around the world bought just 1 or 2 ounces of silver, physical. So, bought $60 worth of silver. That would actually really hurt the system. It would really hurt the system because there'll be a squeeze. And what happens is, if you do manage to get a short squeeze on silver, so here's the thing. Here's one thing. I'm not saying that there is a short squeeze on silver. At the moment, it looks to me it's just a simple pump and dump. Retail's getting played, and they don't know it. That's what I think. I don't think this is we're nowhere near a short squeeze just yet. We will know when we're near a short squeeze when bullion banks and SLV starts pulling out their force majeure clause and going, yeah, we're going to settle you in cash, not physical delivery. So when we start seeing all these force majeure clauses being bandied around, then all of a sudden we'll know that we're getting towards some sort of silver squeeze. Now, if there is a short squeeze, and we do start seeing a run up to say like $50 odd, etc., all of a sudden we now enter into the seller's market. At the moment we're in a buyer's market, so it's really cheap and easy to buy. But when we get into the seller's market, all of a sudden what you'll see is that a massive disconnect between the physical price of silver and the spot price, i.e. the paper price. And so there'll be huge premiums on physical silver. Like if you go back to 1980, when it shot up to $50 and they paused like paper trading of silver, the spot price stayed at around 50 and then crashed, but the physical price of silver shot up to like in the hundreds, $200, $300. And so there'll be a massive premium on getting physical silver. So am I selling my physical silver? No, I'm keeping still. However, it doesn't mean I'm not tempted, because remember, anyone that knows me, all that floats around in my head on a daily basis are a whole bunch of seesaws. I've got like 10, 20 different seesaws in my head at any point in time. And so one thing that you could have a look at is, okay, sell silver. Sell silver. Buy, I don't know, ether. Okay, so here's one potential seesaw. So the variable in here is, let's say, so there's a few variables. One, let's just say in this particular seesaw you're bullish. Okay, you're bullish for both. Okay, and this particular seesaw is all about which is going to boom faster. So faster and, I don't know, more. Bad English. And so when you look at this particular seesaw, ether against silver, in my opinion, I think ether will boom a lot faster, a lot more than silver would. And so in terms of actions, the action from that potential hypothesis is you could sell silver, put the proceeds into ether, and let's say you wanted to get back in it. Ether does its thing first and faster and harder and whatever, and then eventually you can siphon off some profits and then come back and buy silver. Oh, let's just put AG. So that's a potential seesaw that you could do. I'm not saying I'm going to do it, but it's in my mind. One of the things that I guess is scuppering me from doing this is that I'm in physical silver. So one, it's a massive ball ache for me. For me to sell all my silver, I'll have to go to the places where I store my silver. I then need to collect all of my silver. I then need to find someone that will give me a good price for it. And at the moment, if you go to, like, if you live in the UK, the best place to go to is Bullion by Post. It used to be my competitor when I was bullion dealer. But they're going to hammer you down on the price. So, for example, most of mine are in Silver Britannia, so it's all CGT free. So look at the spread. Sell. So if I want to buy any old random best value Silver Britannia and I want to buy 100, so VAT per unit. So yeah, okay. So I would So 100. So it's it's going to cost me 3,228 quid if I were to buy 100 Silver Britannias right now. If I was going to sell a whole bunch of Silver Britannias, all years, yeah, it doesn't really matter. 100. Look at that spread. All you would get, and by the way, you won't get that price. You'll get a price less than that. So that is the price that they'll give you if you bought silver from them, and it's unopened. It's, you know, and it's still in the original packaging and conditioning. That's the price I'll give it to you. If it's not any of those, you'll get a lower price. So all of a sudden, like, the spread is huge. So selling physical silver right now is not a good idea. So yeah, lock in your price, actual price based on the metal. Yeah. All goods are tested on receipt, verify both weight and purity of the metal, and don't forget, you've got to then send it to them. And so that's going to be more postage and packaging. So don't forget, if you've got, say, 500 ounces of silver, that's roughly 17.5 kilograms. Okay, it's your call. Do you guys want to see what 500 ounces of silver looks like or not? Because it'll take probably 3 minutes to go and get. Or not, or is that for a different time? You've got some... Sorry? Hello? Is that yes? Why not? Okay, give me a few minutes.
Yeah, go on, mate.
Okay, I'll be right back.
That wasn't me.
Right, yeah. I'll get rid of the screen share so you can see. So I can see what you're seeing as well. I'm out of breath.
I think you might want to mute everyone again, mate.
Okay, one sec. When I stop sharing a screen, Zoom changes everything. Okay, right. So yeah. And before you know, before you, I'm out of breath just running. It's not wise to have a lot of silver in. So first of all, I've broken a whole bunch of security sins. One, same with crypto and gold and silver. Rule 1, don't tell anyone that you have gold and silver or crypto. 2, definitely don't tell them that it's at your house. And I've just broadcast it to X amount of you there. So yeah, I am breaking a few sins here. However, the bulk of my bullion is not in my house. Okay, so this is just 500 ounces here. As you can see, it's not that big, is it? It's freaking heavy. It's like 17.5 kilograms, but it's tiny. It's very compact. And if you had 500 ounces of gold, same weight, obviously. So in here, don't know if you can see, they're all in tubes of 20, and I've actually opened one. So they look like this. Now the thing with silver, never touch it with your bare hands because it leaves grease on them. Although you may not think you got grease on them, but you will. So 1 second. Yeah, so I don't know. Oh, sorry, I'm looking at the wrong thing. Yeah, so they're really cool. When you have a whole bunch of gold and silver in your hand, it genuinely does feel like proper money. And I don't want to clink these around too much, so I'll just put these back. Sorry. Got my 𝗵𝗶𝗀𝗃𝗃 jumper here. Don't know if you've seen this one. That looked really good on the picture when I bought it, then it looks really weird in real life. It looks deformed. Anyway, but yeah, that's physical silver. It's an utter chore to own and have, simply because it's very illiquid and a ball ache to sell. So I think I've answered my own. Oh, I've got the paperwork here. Anyway, so I think the answer to my original question is I'm not selling my physical silver, because simply it's not worth my time and effort to sell it. I'll put that back later. And also, I'm in silver for the reason that I'm waiting for the global monetary system reset. And when it does reset, so whether it will be the IMF, SDR, or a new digi-currency which is partly backed by gold and silver or whatever, that's when you see the biggest booms in gold and silver. So, what was it? The 5,000-year average gold to silver ratio is 15:1, roughly, depending on what time in history and where you were in the world. And that's simply due to normal price discovery. So for every 1 ounce of gold that was dug up, as a byproduct, they would have roughly 15 ounces of silver. And the price has been like that for ages. It's way out of kilter now, but with even very rough or very pessimistic reports, as in estimations on gold, gold can easily go to $15,000 with only a few things happening. And so with the 15:1 ratio, that's silver at $1,000. So that's the sort of ballpark that I'm looking for. So when silver gets to around $1,000, then I'll be, I'll consider selling my stash. So, but I don't want to make this into a whole trading pub full of silver. Let's move on. Okay, we've got a picture to download here from David Dickinson. I'm hoping it's not a massive willy. Let's download it. What does he got? What you got? Hey! Yeah. So, Mark Adams, Rickard says 5 years for gold to boom. It doesn't surprise me. Tom, would it be okay if it's a little willy? Right. So where were we? Let's get back to this. Faster, more. Okay, so the next question is, can we trade this? So can we trade the volatility in the bang stocks? But I said bang, not fang. Fang is Facebook, Amazon, Apple, Netflix, Google. The bang stocks are these pump and dump ones. What was it? BlackBerry, AMC, Nokia, and GME. So my safe professional, it's not even advice, remember, this is the trading pub, we're all sat in the pub, and just like people talk in a pub, my opinion is that I wouldn't touch it with a barge pole. I really wouldn't. Like, as I said in the last video, this will go to not zero, this will come crashing back down. Anything that goes up vertically comes down vertically. So if we get this chart back up, and I mean, hell, let's look at Doge. Mind you, Doge, I think, has had a bit of a repump. Yeah, oh no, that's 1 hour. Yeah, so Doge had a bit of a rally. XRP, they all did the same, but they all come crashing back down. And I think DFV, the guy that's holding on to, what was it, tens of millions of call options there, it'll be very interesting to see when he sells out. Because when he sells out, you're then going to have all of Wall Street Bets selling out as well. So not AMC, GME will be coming crashing right down. That I can promise you. Whereas at the moment it's hovering around 307. So yeah, interesting. What else is there? So that's, yeah, so I wouldn't trade it. So all of a sudden over the weekend I've had endless amounts of questions about options. So I think a lot of people have seen this DFV go, turn 50 into X, whatever. And obviously he's done it via options. Now I would highly recommend to stay away from options and futures, especially futures, but also options. It will ruin you. It will ruin you a lot faster than normal CFD trading can. And so I see a lot of people trying to how can I say this? So let's take stocks, for example, and if we have, can you still see my screen? Just double checking before I move. Can you see my squiggles, folks? Yeah, cool. So for example, you have these inverse tracker stocks. Okay, so let's just take SPX. So that's S&P 500. So with the tracker stocks, so in a perfect world, if you have the S&P 500 crashing like this, sorry, let's do this in a different colour. So if you have the S&P 500 and it's crashing, and you have, I don't know, a different colour, and you have, I don't know, an inverted or inverse tracker, like 𝗂𝗂𝗀𝗂, etc. There's all sorts of tickers out there. In a perfect world, it would do this. Okay, so for every point the S&P 500 goes down, the tracker will go up 1 point. But this is not a perfect world, and the way that inverse trackers work is that every single day they're readjusted. And so what you can actually do, and I, by the way, this is a $35,000 lesson here. The last time I dicked around with long-term dated options, so leap options, so they're basically call options with really long expiry dates. I lost $35,000 even though I was correct in the call. So for example, I had lots of different positions on. The main call was correct. So what you could see is this. So let's say the S&P 500 continues going up like this. Oh no, actually. Let's say it just goes flat. Doesn't even need to go up. Let's say it just goes flat. And then you've also, let's completely different colour. Let's do a crazy colour. And you have this inverse tracker. Remember, you only make money if S&P 500 crashes, okay, or goes down fast. If what actually happens is that this goes down, this is like a melting ice cube. And so, yeah, if the S&P 500 goes flat, you'll actually end up losing money every day through fees, commissions, and the way that they do this daily adjustment. And what then happens is, let's say, I don't know, the S&P 500 drops 500 points. You would hope that the tracker goes up 500 points. Wrong, doesn't. What you'll find is that it'll only go up a percentage, fraction. So this may go up 300 points, whereas the S&P 500 may have crashed 500 points. Now here's an even worse situation. Let's say S&P 500 goes down, but goes down over time. Okay, not in a crash. It just sort of does a slow death. Well, you would have thought that your tracker also would probably do this. No, it doesn't. At best, you'll be flat, but you'll probably end up losing. So if you are using call options or futures or anything like this, and you're playing around with inverse trackers, so ETFs, exchange traded funds, it only works if the S&P 500 does a March, COVID style crash, in which case your tracker fund will then shoot to the moon. And yeah, I remember, what was it, 2014, maybe 2013, I saw, I think it was 2015, I can't remember. I remember I made a bunch of money in 2015, 24th of August, that was my Black Monday event, and I think because I saw a big crash happening in 2015, I wanted to try and capitalize it in many ways as possible. So I shorted the shit out of it through FXCM, etc., and I made loads of money that way. But I think I also then tried to go long with some call options, but using these trackers. But because it didn't crash in time, I think I was sat there for 6 months waiting for the market to crash. Meanwhile, my tracker fund had just diminished. So if we see a chart, it'll show you a million things. I think off the top of my head, 𝗂𝗂𝗀. No, here we go. I think this is the inverse tracker. Was it S? There we go. 𝗁𝗂𝗀𝗀. Thanks, Alex. Yeah, look at this. This is exactly what I'm on about. So let's go to the weekly chart. You can see how much it's crashed. Oh yeah, there's reverse splits as well. Yeah, so it doesn't show a proper story. But as you can see, this 𝗁𝗂𝗀𝗀 thing, like, it's a melting ice cube, as you can see. Now let's zoom right in to March 2020. So you would have thought March 2020 would have been game time for 𝗁𝗃𝗀𝗃. Yeah, that's the Black Monday. I didn't get it right. Where's March? Jesus. Oh, here we go. Woohoo! So, whilst you have the S&P 500 just having the arse fall out of it over March, what does this inverse tracker do? It goes from, call it 80, 85, it reaches 160. So yeah, it doubles, not bad. But then what happens? It just continues to die. So my word of warning, this isn't advice, this isn't anything, it's just a word of warning. Do not touch inverse tracker funds. And if you are going to go and play SLV, yeah, you can actually go and buy SL. Okay, let's backtrack. Most people probably don't give a shit about, trying to kill the system. Most people, let's be honest, I'm the realistic trader after all. Most people don't care about that. All they care about is, can I trade SLV or Dogecoin or whatever right now and make a quick profit on it? And by the way, don't feel bad. It's not a bad thing to think that. 𝗴𝗶𝗶 is what everyone always thinks about. What's in it for me? And on a subconscious level, we are all saying 𝗴𝗶𝗶 inside, what's in it for me, multiple times a day. Even if your partner, your wife or husband goes, hey, can you just do me a favor? Can you just go and do this? Like, your answer will probably be yes without hesitating. But in your subconscious, you'll be thinking, what's in this for me? Yeah, it's like relationships, work, business. And so I just want you to understand that there's absolutely nothing wrong in thinking, okay, I don't give a shit about, flipping the bird, screwing over the hedge funds. Can I make some quick money in this SLV squeeze or potential squeeze, etc. And so if you're in that camp, that's absolutely fine. Personally, I'm not going to play it. And if I were to, I'd probably just try and go long in 𝗵𝗃𝗃𝑐M. Come on, let's change the time frame. Here we go. So if I did want to have a quick buck, I would just stick to the basics. I would simply just go long on 𝗵𝗃𝗃𝑐M. Because if SLV, the ETF, goes to the moon, well, guess what? It's just 𝗵𝗃𝗃𝑐M's chart here is just going to follow the spot price. So I guess that's a way to do it. Yeah. So let's quickly look at the chat box. I know there's been a lot of questions. I'll move it onto the main screen, because I'm recording my screen, so hopefully everyone can see.
Just quick on this one. Where can I find the approach? The BCRT approach.
Sorry, you're a bit muffled, Makan. Can you say that again, please, mate? Can you say that again, please? Hello? Okay, I've lost you. If you can type it in the chat, I'll get to it. Right. Anyone want to team up and go to Siam's house? You do. You don't want to come to my house. Not to breach it. I've mapped out all the choke points in the house, and I've got fallback positions. Don't forget, I've got a very powerful paintball gun up there with marble bullets. So they're legal, by the way. It's basically, they're marbles, but with a rubber coating, and it does 220 rounds a second. And there's also pepper balls in that hopper as well, so it makes you cry. Yeah, I'm a bit of a... Anyway, moving on. So, what's my address? Okay. James, what's wrong with small finger touches? So, in the short term, nothing wrong. You won't see anything so if you touch, silver with your fingers, over a year, nothing will happen. But then, probably in 2 to 3 years' time, you'll see it go dark brown, dark green. My dad has a bunch of silver at home, and obviously...
Yeah, it was, yeah. So if you could just put just an action there to send out the thing once it's completed, that'd be great.
Macan, is that for us? I'm just going to mute everyone. I don't think. I think.
I just want to see the approach because I know we spoke about it before Christmas around how many routing flows are we going to build and test and all that kind of thing. So I just wanted to understand.
Sorry, is Macan talking to us?
I think mute everyone. I think he's talking to somebody else.
Yeah, fair enough.
It's talking to someone else.
Yeah, okay. Muting. So, sorry. Yeah, so yeah, my dad has a bunch of silver, and he was showing all his friends, and they're all dark brown now, which is quite funny. So, let's go back to the questions. Are multiple Netflix? No. Okay, so Jordan, so where do you see the funds backing GME selling rebalance when there's such a heavy short float? I don't know, but I think what are a lot of well, okay, so if it's a fund, so if it's a fund that just happens to have GME in its portfolio, that fund will also have a pre-existing rebalancing thing. So whenever a fund, a certain stock makes X amount of profit, what will automatically happen in terms of their robots is that they will automatically sell a bunch of that stock to rebalance the whole portfolio. So if you look at ARK Investment, they're massively keen on Tesla, and they have a lot of Tesla. And what happened last year is that Cathie Woods, I can't remember, she was actually selling Tesla stock, and it's not that she didn't believe in Tesla, it's just that their Tesla chunk of their portfolio had grown so fast and so large that they just had to, their existing policies that they had to rebalance their whole portfolio. So they would have just sold that profit and then just bought a bit more of everything else. So that's what will happen with the rebalance. Right, so let's look at these questions. Rickards has successfully predicted 12 of the last three recessions. Yeah. I actually have 50,000 Doge. No, 45,000 Doge. I mean, it cost me like, I can't remember, $500, $1,000, can't remember. But I'm only keeping that for the long term in case Elon decides to use it for Mars. It'll be quite fun if he uses it as the planetary currency for Mars. But yeah, that's something I'll just hold forever. Okay, P.S. Siam, non-related trading question for your SIP with Hargreaves. What is their yearly charges? Some charge up to $1,500 per year. I'm not sure, mate. I don't know is the answer. I'm not sure. Adam said he's done a few weekly Tesla calls with 1,000 strike and they get bought. Yeah, doesn't surprise me. Cool, okay, so let's move on. And so we talked about that. Cryptos, yeah, let's quickly talk about crypto. Don't need to talk too much about them. I think the other updates covered them. So it's interesting. I'm always in two minds about crypto at the moment, because part of me is still expecting a big pullback. But then there's so much hype going on at the moment, especially with Elon putting BTC in his profile and just pumping it, that there's not enough data for us to really make an opinion of. So yes, we can say, okay, we've actually got 𝗁𝗏 going on here, so it's broken out of this squeeze here. It's come back to kiss off the trend line before buggering off, so that could happen. Looking at Ether, same sort of thing-ish. If anything, with Ether, let's get rid of some of these lines here. There's more of a rising compression, or what I call a pincer movement. So we have something that's looking a bit like this, and that is actually a bearish pattern. But then again, when you look at the Ether to Bitcoin move, it looks incredibly bullish. Whoops, that shouldn't have done that. Ah, man. Come on. Oh man, I'm literally just putting all sorts of rubbish on my chart now. So the whole crypto market is just counterintuitive, because you have a whole bunch of cryptos that look like they're about to crash. So for example, if we look at ADA looks weak. I'm trying to find, some of them look like they've got a head and shoulders forming. BNB is doing well, obviously, because everyone's trading it. So if we look at Polkadot, they've had a massive run up, but that looks like a head and shoulders or a triple top. That looks weak, and move back down to sort of 11 or 12 wouldn't surprise me at all. Engine coin, that looks weak as well, but that's just having the normal. I did say that would most likely have a 50% pullback because that was just too fast a rally. EOS has done nothing for ages. No. Oh yeah, Energy Web looks pretty weak. I mean, hell, we've got this a couple of high tests here. I don't have any Energy Web. I can't get onto KuCoin. What's Filecoin doing? This is another one which I think Sequoia is involved with, and also Grayscale. Hasn't done much at the moment. Gas, no. It's just that some of them look a bit weak, so I can't actually make my mind up with Bitcoin. But I'm in all of these. I've got allocations in all of these, so I'm not fussed. I'm holding it for the hype rally, and we haven't had the hype rally yet. We haven't seen the massive hype that we saw in 2017. It will come. Yeah, anyway. So that's that. However, the thing I'm looking at the moment, which is actually hurting me, again, is my trusty old friend oil. Oil loves to hurt me. So, yeah, oil is, yeah. So obviously, for those who've followed me for a while, you know that I'm not fond, or I cannot see any real fundamental value in oil up at these levels, and I see oil coming down. But oil will come down when stocks come down, and unfortunately, when we look at, let's say, the Dow, we had a bit of a correction, and what's happening today, I think, is just a bit of a pullback. I think we could see a bit of further falling. And if we see further falling in the big indices, then that'll bring oil down. But I was looking at oil up here and thinking, whoo, look at this baby. This is sat on the neckline. It's made, well, yeah, a triple top, basically. Head, neckline. Should fall, you know, the distance from the neckline to the top is roughly $2 or 200 points. And so a move to the downside would bring us back down to $50. And the $50 level is pretty much 50% of this big move here. If we just draw a little fib, 50% is, okay, just above, between 51 and 50. So I personally see, yeah, $50 to $49 is a realistic target. So last night when the market opened, I actually went short on a pretty freaking large position size. Remember, this is my gambling account, so do not copy me with this. But yeah, I managed to get in beautifully if I wanted to lose lots of money. So yeah, at the moment that's hurting, but I'm just going to wait. For those of you, again, familiar, you probably see there is no stop loss in sight. Again, this is my aggressive account, and when I'm putting in large positions, I watch it like a hawk. So yeah, that's hurting me at the moment. However, if we have a look at some of the positions we have running at the moment, so Euro Loonie, let's have a look at Euro Loonie. Still, it's doing all right. So we got the bounce here, so we went long right down here, trying to get a bounce all the way up here, and it's sort of halfway. And then I wanted to get in again, so I actually put a second trade in here. Where was it? Around here. And yeah, so that's gone down slightly, but yeah, it's just doing its thing. We have Euro Pound. Whoopsie, wrong one. Oh, actually, sorry, Euro Swissie. What am I looking at here, folks? What setup can I see right now? Bit of a test. Hello. Yep, Alex, you won that. Oh no, so Mike, you won it. You said low test first. Yeah. Yeah, this is okay. It's not the best looking halo in the world, simply because overall momentum is sideways. It's just choppy central. However, when you look at the, I guess on a shorter period, yeah, we're in a bit of an uptrend, and we've got shitty looking one. But yeah, that is a nice low test in a rising market. Obviously, I mean, if you look at this on the 1 hour chart, it's definitely a rising market. But on the 4 hour chart, there's a lovely halo there. And yeah, sometimes when you see a halo, it does sometimes retrace within the candle range before going up. But we've got this bounce down here. So if you look at this on the bigger picture, remember 𝗪𝗔𝗃𝗃, 𝗪𝗶𝗃𝗃 is the one that I'm straddling. So I got the bounce down here to go long. We're taking profit up here, and at exactly the same level, you can see that there's a short also there to try and get it back down here. So yeah, this is doing well at the moment. Do I want to go long again? Yes, I do actually. I do. Where's my stop going to go? Actually, no, I don't. I need margin for my oil position. Oh, I'm such an idiot sometimes. So what I was going to do is go long there and have a short stop just below that double O level. What is my margin doing? My margin, yeah. But then the ROI is a bit shit because you've got 22 pips for a limit and then 28 pips as a stop. Nah, actually, screw that. Screw that. So that's that. Euro pound is another one. Yeah, we had a 3 euro position. So euro pound, I went short based on the halo. Yeah, there was a high test here, shorted it, and it did go in profit not quite a bit. It was about 40 odd pips in profit, but I think this is just pulling back to the 8 EMA, so I'm happy with this trade. So that's that. We have 𝗪𝗶𝗃𝗃 is the other one. Wait a minute, have we just looked at that one? Oh no, 𝗪𝗶𝗃𝗃 is the bugger. Did anyone else do the 𝗪𝗶𝗃𝗃𝗃 trade? Yeah. Huh.
Yeah, I did.
How frustrating is this? Look. Let's go and look at it on the 4 hour chart. So what happened is that we shorted it here, and it looks like it hit our target. If we then change it from, see, this is the key thing. When you oscillate the chart between bid price and ask price, look. So on bid, it looks like it hit our limit. But when you look at ask, it missed us by 1.6 pips. How frustrating is that? So, yeah, we missed out on that profit. Mind you, it was only a small profit. Yeah, 208, yeah. Roughly a 2R, 1.8R trade there. And it's rebounded. So, I'm going to leave it for the moment. That's frustrating. I mean, this is chop central, so it wouldn't surprise if it went back down here. And then Luna Yen, I think, was the other one where just missed our limit. No, sorry, that's a completely different trade. Yeah, so I'm still got this big Luna Yen one. Miguel, I just saw your thing. Trend going up with the low test. Will it not start falling with the EMAs cross? No, ignore the EMAs, Miguel. With the halo, you just ignore the EMAs. All you're looking for, effectively, is a low test in a rising market or a high test in a falling market. And they're everywhere. In every rally or crash, there's always a high test or a low test. So, for example, here's a little, let's just look here. I'm pretty sure there would be one. Yeah, there's one. So, for example, here's a rally. Here's a low test. So you go long, and then it does its thing. Whereas most people, when they're looking at high test and low test, they're looking to reverse it. So, for example, here is an example of a high test. Most people are looking at that go, oh yeah, high test, it's a reversal, and they'll start shorting it. And then you get rolled over. But then, having said that, to be fair, there's another low test I would have gone long on, definitely. And we would have got rolled over there. So, obviously, there's no system on the planet that gives you returns like, 100% win rate. So that's that. Let's have a look at Tesla. I'm sat on the sidelines with Tesla at the moment. I got out at 8.20. Simply because I see, like, when stocks crash, or not crash, let's use a less emotive word. When stocks have a bit of a tumble, which is highly likely, Tesla will come down with it. So I got out at 820. I got in at about 400 down here. So I made nice returns on my Tesla, but I'm waiting for this to pull back down a bit. So obviously there's this bottom trend line here, and this big old gap which needs to be filled. Can I make this change? No, I can't. So I'm eyeing up somewhere around the $700 level. I don't want to be too greedy, and if it goes back down to 500, I'll try and find extra cash to put in. So Roberto has said, on the high test, if you enter beneath the test candle, as a rule, that trade wouldn't be triggered and you'll be safe. That rule works well for me. True. However, then there's a whole bunch of trades that you won't get triggered on, because there's a lot of trades where it just carries on moving, because you have to understand the price action. So at the end of the day, when you're looking at indicators or candlesticks, etc., it's just a visual representation of market or of price action. How the price is moving, what has it done in its way here. So when you have a low test, got a fancy candle like this, you have to understand what's actually happening. So yes, this on the daily chart, it may look like this, but when you jump down into the lower time frames, what's actually happened is the story will look more like this. So market goes all the way down, it probably hits some sort of level which the bulls are like, no pass. The bulls won't let it get there. And so what happens is that there'll be a confluence of a bunch of things. So you have a whole bunch of people buying here. You then have a whole bunch of people also stop losses being, stopped out. It's probably those two things. So it's a bunch of stop losses being hit and a whole bunch of people buying on, for a bounce, which then starts a massive rally. And so what then happens is when you look in the higher time frames, lo and behold, you have this low test where it starts down here, goes all down here, gets rejected, and then closes a bit above it. And because of that, you sometimes have extreme momentum. And so if the market does keep going up, guess what? The very next candle is going to start up here, and it will most likely continue going up. So if you do have a rule whereby, so for those who are still not familiar with the halo, don't worry, it's in the course. So a high test. So he's looking at downwards one. So on the high test, so blah 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 blah. So what he's saying is that if you're looking for shorts and you see a high test like this, he's saying that trade wouldn't be triggered as you. Sorry, I'm just rereading what you said. If you enter beneath the test candle, so if you put your entry here. Sorry, yes, I see what you mean. I see what you mean now. So I thought you meant putting an entry sell order up here. Because some you'll just get mixed out. So what you're saying is put an entry sell order. So if it does continue the move, then you're in. You can do that. But at the end of the day, with any strategy or variation of a strategy, what you have to do is you just have to split test it. So place two trades, or at least dummy trade them. So you have your, let's call it, entry order method, and then your at market method, and then after 100 trades you simply see what happened, and sometimes it will surprise you, sometimes it won't, but I don't have the answer, no one has the answer, not even Elon Musk has the answer. The only way to get the answer is to have a big enough sample size in the split test. Miguel has asked, do I invest in any hydrogen fuel cell stocks? No, because it's the next bullshit Ponzi. Just like how every bloody shill was promoting shale oil and gas stuff because there's lots of money behind it. Hydrogen is the next fad. Or it's not the next fad, it's an ongoing fad. So if we look at my videos, I just have a standard answer to this. Sorry, it's not in my videos. Let's go back. because where is it? Here we go, top of my playlist. Here we go.
Extremely silly. And the people have published, there's multiple sort of rebuttals.
I've put the link in the chat box, so have a look at that.
That's a great talk, that one. He just completely bosses it. He's had like 10 minutes sleep or something and just leaves.
That was a long time ago, that interview as well.
Yeah, there was like 30 people there or something, yeah.
What R do you look for with the Halo? Again, it's your call. What you can do is again in the course that you have. Again, I won't. It's in the portal, but what you can do is get a little spreadsheet opened up. Again, there is a template for this, but I'm just giving you an example. So you can have date, pair. Let's put date/time pair, and then you can just go 1R, 2R, 3R, 4R, etc. Okay, so that will be like your top column, and then you can literally paper trade this. So you can just pick up any old thing and just let's go to one with no squiggles on. Probably Kiwi. Pound Kiwi, yeah, okay. So let's say we're looking for low tests, okay, and we're gonna put our stop, in a sensible position. So sorry, high test. We're looking for shorts. So is there any around here? Here we go. Here's the first one. So what we would do is we enter here. Let's find a sensible stop. Let's put it either above here or above it. Let's just be safe. Put it above that 00. So all of a sudden you now have. What is this? 183 pip stop. Don't worry, it's a highly geared one, so it's fine. 183. So let's just write this down. 183 pip stop. And so then we just simply see what would have happened. So would we have got 2R here? Pretty easy. 3R. Oh, this is where my maths lets me down. So 620, divide that by 183, gives us 3.3. Yeah, so you would have got 3R. And then 4R and 5R, you'd probably still be in the trade, or you probably would have got stopped out. So in that case, you can say, right, in this one, yes, you would have made 1R, 2R, 3R, and I don't know, let's just say you broke even on that one and broke even on, I don't know, 5R. So, and by the way, this is how I used to develop all my methods for years and years and years. And then before you know it, you have a whole bunch of trades, like 100 trades. Like you could just do it for each spreadsheet. You could go, right, this spreadsheet is for pound Kiwi on the, I don't know, the 4-hour chart from X period to X period. And then you have 100 trades. And then you simply just do a sum and count out the, which column made the most R. And I don't know, in my experience, it will most likely be probably 2R to 3R, probably 3R, maybe. It depends. 2R, 1R will get you the best hit rate compared to 3R, but 3R will get you more R than the 1R column. The thing is, new traders love a high hit rate and don't give a shit about R, whereas established traders don't care about hit rate, but all they care about is R multiple. So that is the only answer. That is the actual only real answer, is that you don't know until you get some stats. And then the stats will only be valid for that pair on that time frame. And it doesn't necessarily mean it's going to be the same moving forward. So, yeah, statistics is a bitch, isn't it? Tom, so apparently there's unprecedented cash flowing into Bitcoin. Yeah, Grayscale are buying up loads. And it's in consolidation around 30k. What is it that actually makes it suddenly go on a tear up to the next level? 30k to 52k. Is it sudden? Yeah, it's for Bitcoin. It's simply supply and demand, or demand and supply, and there's not much liquidity. So there's not, or in the big boy realm, there's not much liquidity. Like if I had $10 million and I wanted to buy $10 million worth of Bitcoin, it's actually really freaking hard to actually get my hands on that big quantity. at the moment, and I probably wouldn't even get a discount. So in the old days, if you had big money to go into crypto, you'd get a discount. But these days, most likely not. For example, Grayscale, just Grayscale alone, is buying up more Bitcoin than is mined in a year by country miles. So yeah, and don't forget, this is another reason why I quite like the project 𝗷𝗿. And I think 3 years ago I made a video about lending platforms doing pretty well in the future. Simply because those that are sat on shitloads of profit at the moment, they don't really want to sell their Bitcoin, because then they'll miss out on PAG, potential appreciation gain. And so instead of selling out, they're just simply going to put up their Bitcoin as collateral and just take a cash loan. But what a lot of people are doing is, instead of selling up, they're just locking up their Bitcoin in some of these lending platforms like 𝗷𝗿, and then they're just getting a cash loan. Normally it's about 70 to 80% of whatever you put up. And then what are they doing with that cash? Well, they're using that cash to buy more crypto. It's part of me wants to do that, actually. I could easily put, I don't know, what is 80% of 150? So I had this little thought the other day of locking up $150,000 worth of crypto. I could then get a $120,000 cash loan from on 𝗷𝗿, and then with that 120,000, I could put it in, I don't know, hell, Ether. And let's say I did that right now. Ether's at 13.12. It would then buy you an extra 91.5 Ether. So then guess what? Another seesaw is coming our way, folks. Because the seesaw that you're now looking at, trading is just seesaws, is so you do the, I don't know, let's do the borrow play. And with the borrow play, you have the associated, you've got the charges. Now the charges will be whatever APY you get. Remember, APY is a better thing. It's the overall overall charge that you're going to be paying over a year, not APR. APY is the one you need to look at, whereas everyone only knows of APR. So there's that, and then there's potential APY changes. Again, with all these lending platforms, they'll say that if volatility gets crazy, they have even if you lock it in, even if you get the fixed rate, they still can change your fixed rate. So it's like, what's the point? So let's say you're going to be paying 10% a year. So 10% a year on, let's say, 150,000 is 100, so 15 grand a year. Okay. So let's say you did this for a year. And I put $150,000 in, sorry. So this is just one side. So if I do that, obviously this frees up $120,000 in cash. Well, I say cash, it's actually in a stable coin. It'll probably be in DAI or something like that. Or Tether, whatever you choose, really. Or literally go straight into Ether. Doesn't have to be in a stable coin. So, and the cost of doing that will be your principal plus $15,000. Plus or minus, I would say plus or minus 5 or 10 grand, just for shits and giggles, just to be safe. And so so that's all the downside, but what's the upside? The upside is you then get an extra, what was it? I forgot what I said, like 90 Ether. Obviously, I'm doing this with the 150. You can just remove a few zeros or whatever, or add a few zeros. I don't know. There could be some whales in here. And so the question you now have is, will 90 ETH make more? Let's round up the cost. Let's just say it's 20 grand in cost. So that's the question you need to ask yourself. If you were going to do this lending thing, will 90 Ether make more than $20,000? Well, that then takes you to another little question of, okay, well, what price? So let's say we bought in at, what was it, let's call it $1,300. What price does Ether need to move to say lock in $20,000? Well, $20,000, divide that by, was it 90, did I say? I need to make $222 per ETH. So Ether just needs to go to 1520. Yeah, let's just call it 1530 because of transaction fees and all that sort of stuff. So then the other question is, so this question basically relates to, will ETH hit 1530 within 12 months? Because don't forget, part of this seesaw is that Ether or crypto, cryptocurrencies, CFX, it could crash. It's a valid question, or valid statement. It could crash. It could crash, 80% over the next 12 months. But so that's the counter question to that one. Will Ether hit, or could it hit 1530 within 12 months? Well, Ether could hit that in the next two days. So I guess if you're looking at this on the bullish side, you could be thinking, well, this is easy. I could, just get this loan, get an extra 90 Ether, and I know that effectively my break-even point is when ETH hits that. And anything above that is just pure profit. Does that make sense, folks?
Another seesaw here as well. So
oh yeah, but this is Inception. Like the way that my brain works in seesaws, I'm a master of seesaws. There's seesaw in seesaw in seesaw.
If you got 90 ETH, you've got to play it really safe. You lend out 45 ETH back on 𝗷𝑣𝑒 to earn back interest on that, and you play the other 45. Then you're doubling up and playing safe.
Yeah, I know. Yeah, because you can lock up that Ether in Ether 2.0 and stake it and get 8 to 10% a year.
Yeah, there's so much you can do with DeFi at the moment. It's crazy.
I know. There's all so really when you, yeah, it's like a freaking Russian doll Inception, because there's that. After that, yeah, and that's basically what trading is at the end of the day. And we all make these little seesaw decisions in our heads, but just split second. You do this like just going down the stairs. Like there'll be a part of you going, hey, let's run down the stairs, let's jump down the stairs, let's skip 5 steps. But your brain is constantly going, no, I'm just going to walk. I'm tired. So, or that's the same for me. My brain wants to run down the stairs, yeah. So, and cost, benefit, risk, reward, yeah. This is just how, if you start thinking like this in everyday life with everything, your life will get better. I promise you. Trading, the best benefit I've ever had from trading is not all the money, it's just your thinking. It just upscales your thinking, or your risk analysis, basically. 𝗵𝗶, plus a few million Bitcoin are lost, and halving every 4 years makes Bitcoin more scarce. Yep, agreed. Same with, yeah. And the other thing with 𝗷𝗶𝗶 is that there's only, 16 million max supply, which, yeah, it's nuts. I should incorporate a seesaw into my logo. I probably should actually. Right, so any questions? We've been here for an hour and 24 minutes. Any questions? Have I lost anyone? Does anyone massively disagree with me? Because that could lead to interesting answers and questions. Kieran, yes, it's in the Telegram chat, mate. That video of Simone's Kryptonian portfolio is in our Facebook chat and also in our full member, because you are a full member, it's in our Telegram. If you scroll, I think it was that one. Yeah, it's this one here. So I made this Saturday, so what, 2 or 3 days ago. This covers what cryptos I'm buying. So Richard, I feel like seesaws have helped me visualize something I kind of knew already. Good. Any other questions? Yeah. Mark, any chance you can start a Tron squeeze with your connections? I have no connections. I'm small from. I'm a nobody from Norwich. Oh, by the way, if anyone plays Age of Empires 2, I've got a little WhatsApp group and there's like 9 of us in it. Adam and I played last night. It was really fun. So feel free, just let me know and I'll add you into the WhatsApp group. Starting up a new side hustle. No. Tron, yeah.
I did have a question that's not about Age of Empires.
Yeah, go for it.
As fun as that is. I'm getting the same feeling that I did last week. Just nothing to trade. I'm just going to look at the charts.
Yeah.
I'm getting that again. And I suppose there's a little bit of a sense of like, it's not FOMO, more am I missing something? There is a difference.
Yeah, and it's spot on. There's a reason that I haven't gone through the markets today, is because there's really not much to trade at the moment. Well,
okay, all right, it's just, I guess it's just a bit of critical thinking, just to confirm that, you'll get in the same sort of situation.
And I just want to add a bit more context to that, because this is where people get me wrong on the internet all the time. Someone will literally take that sound snippet and go, Siam says there's not much to trade here at the moment. Idiot. So the context is that using the methods that I typically deploy on the currency markets, there are no valid setups. That's what I mean. So for example, if I'm looking for halos, there's not many valid halo setups today. If I'm looking at 8 EMA bounce and trail, there's not many. Having said that, I've just looked at 𝗂𝗂𝘃 and there's one here. But mind you, it's already happened. I've missed it. So that's what I mean. The context is everything. It really is. So when I'm trading these currencies, I'm looking at it from a halo perspective. I'm looking at it from a support and resistance like bouncing, and also 8 EMA bounce and trails. So from that perspective, I'm not interested. So that's why. So yeah.
But sorry, that was my fault.
Obviously,
no,
not at all.
A huge amount going on in loads of different markets.
Yeah,
of course. Yeah.
So, but before you know it, there's a little tweet thread and people going, Simon can't find any trades, and there's loads of trades. Look at GME. Look at all these stocks. Look at well, there's fit, as I say, the very crude terminology. In every, mind you, there's not many bars and nightclubs going on at the moment, but in a non-crazy world, there's always hot men and women, as in sexy men and women, in every bar in every town on the on the planet, and you're missing out on meeting all of these people, or but you don't beat yourself up, because in your hometown there's enough sexy men and women for you if you're single. I need better analogies. I need coffee. Okay, so Digi said, got in late. How can I access a recording from today and the previous session? So I put the recording up from today later in the group, but if you look into the so Digi, which free Facebook group are you in? We've got a few, because we have the Jan group, we now got the February group. But either way, if we just look at this one, if you scroll down a bit, there will see you'll find the recordings from last week. So that's that. But also, even better, probably a more succinct way. Succinct? Concise? A better way is if you go to the portal, and if you go to live session recordings, why are there two? Oh, web dev is getting a message. I'll just screenshot that. Sorry. That'll be fixed. If you click on one of these, you should see the previous recording. Come on, Norwich Internet. Here we go. Trading Pub, 25th of Jan, my birthday. And then the previous one, previous one, previous one. So definitely watch them, because there's a whole heap of value. As you can see, with each Trading Pub, I'm talking anywhere between an hour to 2 hours. And I know some of you may get really bored, but there are definitely nuggets of content here which will help. And again, in my opinion, there's at least one nugget worthwhile your 2 hours, if that makes sense. So yeah. Hey Sam, I don't see Jan 21. What do you mean, Stephanie? I don't see Jan 21. So could you elaborate that, Stephanie, please? Ah, thank you.
I think she means it's a beginner group. You mentioned it just now.
Ah, yeah. So this is just a back end thing. At the moment, we've got a bit of a cluster mess going on with Facebook groups because we have a women's only beginner group. That's a 2-month thing, but that's closed. We have this original free Facebook group which people joined in on November, December time. So that'll go to 0 at some point soon. And then we've got the free group from January to March. So basically every month we open up a free trading group, and so from the 1st to the 15th we open up the doors and then shut the doors. And then as of today, somewhere down in this list there'll be the February group, and there's probably no one in it at the moment. Here we go, February to April. Oh, 26 people in it. Nice. So if anyone's here, howdy. Yeah, so that's what I meant. Got a screenshot. Matthew, regarding the backtester, I don't know. I don't know. So the way that I'm doing with the halos. So if we take, well, so for me personally, I'm leaving the full auto stuff on just because I want data. But so let's take a high and low strategy here. So all I'm doing is I've set my settings for the halo on relatively low settings. So I get some form of volume. So I get a couple of halo settings every day. So this is 6. Obviously this is old. So all I'm doing is I'm simply clicking the link. I haven't logged in yet. Stand by. It's now expired, obviously, and I'm simply looking at the link going, hey, do I want to take this trade, yes or no? And I'll just be pressing yes or no. So that's all I'm doing. So you don't really need to worry too much about the back tester with that, because yeah, you're just simply looking at it with your with your eyes and saying, is it a good one or not? So right, I think let's call it a day there. Hopefully you'll go out and buy physical silver. That'll definitely help my stash. And yeah, and if you're up for shits and giggles, have a look at DFV to see what he does, because I think every week he posts, whether he's still in it or not. It's just an amusing read, the Wall Street's bet thing. Righty tighty, love you all, and again, if you want to play Age of Empires, let me know. See you.
Cheers for your time, mate. Thanks.
Toodles.
Cheers.
Bye.